Hi there, I'm Edward Kelstian, founder of ROE Capital, where we look for market-beating stocks for the long run. In my previous videos, I've already analyzed Boeing and Airbus individually. But today, let's compare them directly. Because while one looks like a deep value turnaround and the other like a steady compounder, neither story is as simple as it seems. Both companies dominate global aviation. But does either actually deserve a place in a long-term portfolio? Stick around, I'll break it down across 5 key factors, which are returns on capital, earnings growth, balance sheet strength, valuation, and a competitive moat, and share where I personally stand at the end. Starting with returns on capital. Boeing is still in recovery mode. Return on invested capital is minus 9.7% and equity remains negative. That reflects years of disruption, safety issues, and production delays. Airbus, by contrast, has a return on invested capital of 3.6%. which isn't stellar, but return on equity stands at 21.8%, and they've achieved that without heavy buybacks. Boeing is still trying to restore its ability to generate value from capital. Airbus, while not explosive, is steadily delivering shareholder returns through operational execution. Now let's talk about growth, and here the contrast is pretty striking. Boeing's revenue has actually declined by about 4% per year over the last decade, and its earnings are still deep in the red. In 2024, Boeing reported an earnings per share of negative $18.4. And while they do have a big backlog of orders, ongoing delivery delays and regulatory issues continue to weigh them down. Airbus, on the other hand, looks more stable, but not exactly explosive. Over the past 10 years, its revenue has only grown at a modest 0.8% CAGR, which is quite slow. However, earnings per share have increased at a more respectable pace, 5.1% annually, with 2024 earnings per share coming in at 5.4 euros. What really stands out is execution. Airbus is now consistently delivering more aircraft than Boeing and continues to widen its backlog lead. So when it comes to growth, this isn't just about numbers. It's about how reliable that growth is. Boeing might offer a turnaround story, but it's high risk and highly uncertain. Airbus, while not growing fast, offers a clearer path and more consistent results. Now, when analyzing companies like these, especially across long time frames and global markets, I rely heavily on Fiscal, my go-to platform for investment research. In fact, all the charts in this video were built using Fiscal. Use my affiliate link below for 15% off to level up your investment research at no extra cost to you. Next, let's look at financial resilience. In other words, who's in a better position to weather downturns and invest for the future? Starting with Boeing, they're sitting on about $26 billion in cash, which sounds good, but they also have $56 billion in debt, which more than offsets it. And in 2024, they burned through a lot of money, with free cash flow coming in at negative $14.3 billion. Airbus, by contrast, is in much better shape. They have 18.7 billion euros in cash and only 14.3 billion euros in debt, so they're actually net cash positive. In 2024, they also generated 3.7 billion euros in free cash flow, and their debt-to-equity ratio has been trending down steadily. The implication here is simple. Airbus has more flexibility to invest, weather downturns, or return capital. Boeing remains more constrained. Now let's talk valuation, and this is where investing style really starts to matter. Starting with Boeing, it's still unprofitable, so there's no meaningful price to earnings ratio and no PEG ratio either. Any valuation here is based almost entirely on a forward-looking turnaround thesis. Basically, you're betting that things will get better even though the fundamentals aren't there yet. Airbus is a very different story. It's profitable and currently trades at a PE of around 32. With earnings growing at 5.1% annually, that gives us a PEG ratio of roughly 6.3, which is quite expensive by traditional standards, especially for mid-single-digit growth. So what does that mean? Well, Boeing might appeal to deep value investors who believe the company can recover and eventually re-rate higher. On the other hand, Airbus may attract those who prefer quality compounders, even at a premium. Though the current valuation may leave limited upside, unless growth meaningfully accelerates. When it comes to competitive advantage, both Boeing and Airbus benefit from a strong duopoly in global aviation. Their structural moats are well established, but what really matters now is trajectory. Boeing has long-standing relationships with the US government, defense sector and NASA, but its commercial reputation has taken a hit and execution risk remains high. Airbus, meanwhile, is gaining momentum. It now has a backlog of over 8,600 aircraft compared to Boeing's 5,600, and it's more diversified both politically and operationally. So while both have structural advantages, Airbus appears to be strengthening its position while Boeing is still trying to regain its footing. So what do we have here? Boeing is a turnaround play, still drowning in debt and struggling with execution. Airbus is solid, profitable and dominant, but trading at a premium that's hard to justify for its slow growth. So who wins? If I'm being honest, neither stock stands out to me as a compelling investment right now. Boeing feels too unstable and Airbus feels too expensive. In my view, there are better opportunities out there that combine growth, quality and valuation more effectively. That doesn't mean these aren't great businesses. It just means the current setup doesn't align with what I look for at ROE Capital. What do you think? Let me know in the comments, and if you found this breakdown helpful, feel free to like and subscribe. Thanks for watching, and I'll see you in the next one.